recording. So when you look at the performance management paper, we have one section of it which talks about costing techniques. That is to determine cost of a product or a service. We have some techniques in the performance management syllabus which will show you how to determine cost per unit of a product or a service. So I'll just entitle it at the first one. We have it as marginal costing, right? So marginal costing, marginal costing. I just give it the name MC. Then we have absorption costing. Absorption costing. I give it the name AC, and activity based costing. I give it the name ABC, right? So this is the first costing technique. Then come to the second. So the first, marginal costing, absorption cost, activity based costing, right? Then we come to the second, which is target costing. Target costing. We come to the third. You're going to look at life cycle costing. Life cycle costing. We're going to look at environmental costing. Environmental costing. And life cycle environmental costing, right? So yeah, that's okay. So we have the life cycle costing here and environmental costing. Let's just fix it over here. So the next type of costing that we tend to look at, mostly in the case of an individual preparing for the exam, would have been a relevant costing, but the relevant costing technique, we do not factor it as part of the costing techniques. We only look at it from this point of view, and that is what we all the time consider, right? That is what all the time we tend to consider. So if you look at the manual, prepare the manual, incorporating a lot of issues in here, which will help us cement our understanding, a lot of issues. So we will go through one after the other and ensure that we are in good shape, right? So if you look at the ACC PM examiner, he wants students to expose themselves first of all with costing techniques. So please, I've indicated that costing technique is part of the short-term decision-making techniques. So we do not add it as part of the costing techniques. According to the ACC examiner, the syllabus, we do not add relevant costing to it because it's a different assumption into decision-making. It is part of decision-making techniques, not costing techniques, right? So we come to the second, that is after knowing how to determine cost per unit of a product or service, using any of these techniques, either marginal costing, absorption costing, activity-based costing, target costing, life cycle costing, environmental costing, that sort of, we can now be in a dilemma. Now that you've been able to determine the cost of a product or a service, you can also be in a dilemma as to the number of units to produce. Sometimes you become confused whether to produce 50 units of a product and 30 units of the other product. Sometimes you become confused. So the first one, we have looked at the point where if you are confused with determine cost of a product, what techniques can you use to help you determine cost of a product? And you can use the marginal cost, absorption cost, activity-based costing, target costing, life cycle cost, environmental costing techniques in helping us determine cost per unit of a product or a service. But the dilemma which comes with the number of units to produce, we also have techniques which the PM syllabus also gives us. And that is what we call the optimal production plan techniques. Optimal production plan techniques. Optimal production plan techniques. So when you talk about the optimal production plan techniques, it looks at what is the possible mix of product to produce. So mix of products. We have techniques like that. So what are they? We can talk about, first of all, let me just come here so at least we can talk about, first of all, key factor analysis. Key factor analysis. We can talk about the second, which is throughput accounting. I think one of your senior colleagues who is writing in the June posted a question in there. I'll go in there and go and solve it. I think I saw issues like this. Linear programming. We also have what they call linear programming or the theory of constraints. We can also talk about break-even, or cost volume profit analysis, right? So when we are in a dilemma as to the number of units to produce, we tend to have a main headache called optimal production plan techniques, which brings techniques that if you're confused as to the number of units to produce, you can rely on either key factor analysis, throughput accounting, linear programming, or break-even or CVP to help you decide the number of units to produce. Then we come to what you call point 3, short-term decision making. Short-term decision making. I'm giving you the overview of the PM syllabus, right? Short-term decision making. When you look at short-term decision making techniques, we have the short-term decision making techniques. A moment. We have short-term decision making techniques. We have the first one. So we have make or buy. Make or buy. Make or buy. We have the second to be relevant costing. This side is what the time choked. A lot of issues tends to come up here. Shut down. I'm giving you the overview of the syllabus, right? Shut down. So talk about further processing. Right? So make or buy, a relevant costing, shut down, further processing. Then we can also talk about issues of make or buy, relevant costing, shut down, further processing. We can also talk about issues of what? Risks and uncertainty. When you join the class, you realize that we're talking about exam tips, right? So we talk about risk and uncertainty, look at expected values. I think you were there when we solved one question on expected values. So we have expected value, we have decision tree. Current situation, the examiner now asks you to draw a decision tree. Talk about profit table, also called payoff table. And that will bring in the criteria of maximum, minimax, regret, maximax, all those sort of it, right? So let me just make it A here. So maximax criteria will come up under that topic. You have the minimax regret. Beautiful question, I like it, right? Minimax regret, because each and everyone has having regrets in life. So how can you minimize your regret? We can talk about maximum criteria, right? So these are also beautiful issues that we need to look at, right? Risk and uncertainty. Then we come to the main pillars of the paper: variance analysis. Then we come to the variance. We are talking about the basic variance. Please, you can indicate this all in your book. When I finish, I'm giving the overview, right? So at least as we tend to go on in class, you tend to know, oh, he listed this, you talked about this, talk about that. But you talk about the short-term decision making, make or buy, relevant costing, shut down, further processing. But you have only gone through make or buy. Doesn't mean the other ones we are not doing it. Right, it turns out to be a guide. You can also go and benchmark it with the PM's study test. If you do not have a place, just let me know. I'll share the study test and the kit on the platform so that you get access. It is for free. It's just a matter of you getting it, then you make a kickstart. So we talk about the basic variances. That is mostly tested in F2, right? But we need its application in PM to help us understand issues. So we have advanced variances. We talk about the main advanced variances. So I'll just make it high. 1, miss and yield. So we talk about miss and yield. We talk about planning operational variance. You heard us making noise on it. Planning operational variances. Planning operational variance. Operational variance. That is what the examiner is going to examine. So students are to prepare themselves for it. Operational. So plan operational. Then we come to sales mix. Sales mix. Sales mix and quantity variance. Sales mix and quantity variance. Sales mix and quantity variance. Then we come to budgeting. Budgeting is in the next topic, so I'll make it, let's say, topic 6, right? So we come to budgeting. Look at the types of budgets. Most important, flexing or a revised budget. Then we move on to point 7, the big problem of the day, performance measurement. Performance measurement. The first pillar of the ACCA performance management syllabus is performance measurement. Then we come to variances. So when you talk about measuring performance, we can look at measuring performance of an individual. So individual performance measurement. We are no HR guys, but we also look at measured performance of individuals. And the topic we look at in measured performance of an individual is what we call the learning curve theory. Learning curve theory. Right. So after measured performance of individual, we can also look at measured performance of divisions. So say divisions from individuals to division. So over here, we can talk about a topic as ROI and RI, that is return on investment and residual income. We can also talk about transfer pricing here. Transfer pricing, the universities are preparing for it. Transfer pricing, can talk about that, right? They are beautiful for ROI, RI, transfer price for divisions. Then we come to C, overall company. So we can have overall company performance measurement. Let me just make it PM, not performance management, but performance measurement. That is, after measure performance of individual, moving on to divisions, look at overall company. So we can talk about financial performance measurement. We can talk about financial performance measurement. Financial performance measurement. The financial performance measurement, that is ratio analysis. Ratio analysis. This, for some time now, the examiner did not want to examine it, only calculating ratios, never. Then we said that financial performance are not only enough in measuring performance of companies, so we decided to come out with the non-financial performance measurement techniques. Non-financial performance measurement, let me just make it techniques. So the first we can talk about here, the first non-financial performance measurement technique is called balanced scorecard. Balanced scorecard. The first by Kaplan and Norton. Kaplan and Norton introduced balanced scorecard. Then we have the building blocks model. Building blocks model by Fitzgerald and Moon. So Fitzgerald and Moon brought building blocks model. Then we have value for money. Value for money. Value for money. So most people call it the 3 E's. 3 E's. Most people call it 3 E's. Economy, efficiency, and effectiveness. Right. So if you look at the syllables, these are the issues in the syllables that you are going to learn. I've taken the pain to list all that for you. You see, it is many, but not so much, right? It is many, right? A lot of issues here, but not so much, right? The students should be able to go through. Now, the beautiful aspect is that I have categorized them into sections, right? Costing technique. Now, it is important for you to note this. Though the first thing to note or to go through in the case of performance management is to know how to determine cost per unit of a product or service. If you are in a dilemma as to the number of units to produce, so if you're in a dilemma as to how much cost that comes with a particular product or service, then you can rely on of the costing techniques to get things done. But a beautiful aspect is that the ACCA performance management examiner do not examine marginal costing. This is only examined in F2. Please, it's very important for you to note that we are not going to die for that. If the examiner is going to ask you questions on it, why do you die for it? Never. We are not going to die for it. But the only thing is that we get the brain behind it, the idea behind it, to help us cement understanding and the absorption costing AC, right? So that means that the first topic, marginal cost, absorption cost, activity-based costing, what is relevant to the examiner and it should be relevant to you is absorption costing and activity-based costing. They are the two items, right? Yeah, they are the most important. Target costing is important. Life cycle environmental costing is important. So we go through them, right? Good. But the case of marginal costing, we do not need it. Examiner is not going to examine you, give you question on it on the day of exam. But we need that idea to serve as a catapult into the absorption costing topic. Because the limitation of the marginal costing technique is what led to the invention of absorption costing technique. Right, good. So when you look at costing techniques, these are the topics over there for costing techniques. After you have been able to determine cost per unit of a product or a service, you can also be in a dilemma. If you work with Unilever, you can also be in a dilemma sometimes as to the number of unit to produce and sell due to certain variations which comes to the market. Demand turns out not to be easily or predictable. So based on the different situations at the market, please a moment. Guys, let's move on. So based on the different techniques that we have, sometimes you might be in a dilemma as to the number of units to produce and sell. So we have the main heading, optimal production plan techniques, also called the mix of products. So we have technique like key factor analysis. Key factor analysis. It will help you determine the number of units to produce and sell. Then you have the next one, which is throughput accounting. Very important topic. We have the next linear programming, and the last break-even or cost volume profit analysis. So that ends the second umbrella of topics. So we come to the third, that is short-term decision making. And under short-term decision making, we have make or buy. Sometimes a company tend to think of making a product rather than buying the product. Sometimes it becomes feasible to buy the product instead of making the product. And at the point where you have, let's say, 5 Ghana cedi, but you still want to eat maybe fufu with goat meat, 5 Ghana cedi cannot make that food. So at that point in time, can you see if you can get an alternative of buying that product? So it depends on the condition at hand. We do not say that we are going to buy a product rather than making it just like that. The condition at hand is what is going to determine your decision, right? So sometimes you can decide to make the product instead of buying it. Sometimes it makes sense to buy the product rather than making it. If you do not have time, your customers are on you. Why do you have to go and waste time to make the product? You can just buy, then quickly just give it to them. As a result of a time factor, it tends out to influence the decision at hand. So that is what we call short-term decision making. Short-term decision making. We have relevant costing also in there. Shut down. Sometimes a company will be deciding whether to shut down or to still be in business. Then we have further processing. Here, the product has already been processed, but you are deciding whether to add certain new features or elements to the product. And you are looking at how possible you can regain or just increase your market share, or just ensure that the product is going to give you a premium price. That is the main reason why you decide to further process. Or probably it can be an instance where you want to increase customers' requirement. And that will be the main reason why you want to further process the product. The product has already been processed, has already been produced, but you think that you want to add further ingredients or further elements to it. And that is what you mean further processing. You further process the product, right? So we have the next umbrella of topic, that is risk and uncertainty. You know, life is full of risks and uncertainty. When you talk about uncertainty, though there's a few issues of things that we don't know what will happen, but at this point in time, when you say uncertainty, That means that we cannot quantify how uncertain we are. But when you talk about risks, risk is the same as uncertainty, but just that risk can be quantified, right, in terms of probabilities. So under risk and uncertainty, we have topics like expected values, we have decision tree, we have another topic called profit table or payoff table. And under that, we look at the maximus criterion, minimus regret criterion, and maximum. There come variance analysis as a next umbrella of topics. So today, basically, I just wanted us to go through the entire syllabus so that at least you get a clear picture or spectrum of it. So variances, we have basic variances. We look at advanced variances, and that is what the PM examiner tends to look at, and that is what he's going to examine on the day of exams, right? You are going to write September, probably. You do not know the exact date, but I think that it's still going to be somewhere very near. So we need to really move as quickly as possible. Probably it's going to be on the 8th, right? I've just confirmed it for you. It's going to be on the 8th of September. You are going to write your exam on the 8th of September. So look at the number of months left, just a few days left. So we have to move quickly, right? So basic variances, we have the basic variance, we have the advanced variances. The advanced variances is what the examiner is going to examine, and that should be an area of your interest. We have under the advanced variances, mix and yield. We have planning and operational variances. We have sales mix and quantity variances. Then we come to the sixth, also important topic, budgeting. So look at the theories of budgeting, the theory of beyond budgeting. We can do some calculations over here. Then we come to the next important element. This is where I say that this is the first pillar of the PM paper, first pillar. You cannot tell us that you went to an ECC PM exam hall and you didn't get a question under performance measurement. Then that is not a PM exam you went to write. It will never happen. You cannot say that you went to an ECC performance management exam hall to write an exams and you never got any question under performance measurement. We will see that, my friend, it wasn't a PM you went to write, right? So it is an area which all the time comes up and every student going to write the exam is aware. So you writing on the 8th of September, you should also be aware. Now we have the first as learning curve theory. Learning curve theory you can use to assess whether employees are learning and what is the rate of their learning. That is it. You can also look at ROI, RI. September is going to be an area of your importance. ROI, RI, and students writing September should master ROI, RI. Transfer pricing, depending on what happens in June, will still be of importance to you, depending on what happens in there. But we've indicated severally that even to those who are writing in June that when we're talking about ACCA performance management, our examiner is in love with a balanced scorecard. So overall company performance measurement, instead of looking at financial performance measurement only in the case of ratio analysis, we do not tend to see the examiner bringing questions like that. It is not like financial reporting paper or financial management paper where the examiner tends to only bring questions under ratio analysis. Never. He tends to like assessing a question on performance measurement, assessing the performance of a company using both the financial and non-financial. And the techniques which you look at measuring performance of companies using financial and non-financial. One, we have the balance scorecard, which tends to do that. Two, we have the building blocks. And when you talk about value for money, it only looks at assessing performance of non-financial or non-for-profit organizations, like charitable organizations, like NGOs. So value for money, the 3 E's, right? So ladies and gentlemen, this is the overview of the ACCA Performance F5 paper. And it's the same thing on the day of exam, you're going to get questions on it. But I'll use the opportunity and the time left to introduce the first topics, right? So I'm just going to kickstart, then at least we make a move. When we are starting, we are going to start with the costing techniques. So the first thing is to look at marginal costing, absorption costing, activity-based costing. I want to use this moment left to give you the idea or the background behind it so that at least in our next meeting, probably, which is going to be tomorrow, by then you have already gone through the reading and you are fine with the first topic that if I'm just going through it tends to help you cement your understanding in that regard. right? So if you look at the first topic, we have marginal costing. Marginal costing. Now, note clearly that these topics, marginal costing, absorption costing, activity-based costing topic, came because of valuation of what overheads. We performance managers never had any problem with valuation of material costs. So mostly we can determine costs, right? So cost of a product. So cost of a product may comprises of one, direct material cost, right? We can have direct material cost. We can have we can have direct labor cost. We can have overhead cost. So I'll make it O/H to represent overhead. So when you sum these three things up, you now get the total cost of the product. But it is not difficult to estimate material cost. Sometimes the material cost is given in kilograms and they give you the price per kilogram. So if I know that 1 kilogram of the material is costing $2 and I buy 50 kilograms of that material, I just multiply the 2 by 50, then I get the price. Because 1 kilogram is $2 and I bought 50 kilograms. So I just multiply, I get what? My $100, I pay for it. Labor cost is not also difficult to estimate. Labor works, we pay labor based on hours worked. So if we are paying labor $5 for every 1 hour, and labor has worked for 20 hours, it is just a matter of multiplying the 20 hours by $5. We pay you $100, you go your way. But when we come to overhead valuation, some people will determine the valuation of overhead using area of space occupied. In fact, the basis of estimating the overhead was arbitrary. It wasn't making sense. So performance managers, which you have also come to meet, decided that, oh, the way of determining valuation of overhead is not right. So let's come out with topics which will actually solve or eliminate this sort of confusion. So in our quest to bring out a standardized way of valuation of overhead, so that the performance manager in Ghana will use that method and still arrive at that same answer, a performance manager in, let's say, Kuwait will still use the same technique and get the same answer. At least we want to bring standardization, just like in the case of financial reporting, accounting standards, where there's that sort of convergence. The same thing applied in performance management. In the case of valuation of overhead, we do not want you to use your different ways to create confusion. So now let's bring in methods of valuation of overhead. So they came marginal costing. But marginal costing was only concentrated on variable element in the valuation of overhead. Then we said that when we are looking at overhead, we do not only have variable overhead, we have fixed overhead also. So why are you not considering the fixed overhead, but only considering the variable element? Then you are not a good technique. So that limitation of marginal costing is what led to what we call absorption costing. Marginal costing was only looking at variable elements in the valuation of overhead. So absorption costing came in to solve the problem of marginal costing. What is the problem of marginal costing? It was only looking at variable elements in the valuation of overhead cost. So you say you are not good enough. There came absorption costing. Absorption costing came to factor in the fixed and variable element in the valuation of overhead. We said then you are good. But it was still having a problem. The problem is that the way it does the valuation, it wasn't clear. So because it wasn't clear, though you consider the fixed and variable, but the way you do it is not clear. So there came what you call activity-based costing. And after the invention of activity-based costing, there hasn't been any model in the valuation of overhead again. So guys, if you should see marginal costing, absorption costing, activity-based costing, these topics actually came in the paper for you to study because of the discrepancies which came up in the valuation of overheads. So we'll bring our meeting for today to an end at this point, but God willing, same time, please do not forget it. We are going to start with the issues. We'll dive deeper and deeper into the first topic. Have a very good evening. And if you have any other question, please, you can just WhatsApp me. But do not forget that God willing, tomorrow 5 p.m. 7 p.m. same time, we are going to meet. Have a very good evening. It's still your tutor, Breman Henry, and you can message me via 0243583352. Thank you for joining. Have a good night. Bye-bye.
Yeah, thank you.